Regional firm. We've got about 1,300 people. I would have worn a different tie if I knew you were going to take a picture of me.
Yep, that's okay. Just keep talking.
Okay.
You got to be mindful, she's also got that on record.
Okay, all right.
Yeah, you're clear, Bob, thanks.
So we're a regional firm. We're headquartered out of Fargo, North Dakota. Our local firm here in Salt Lake joined Ide Bailey in September, so we're a rather new addition to their practice. Across the firm we do, I want to say it's 45 to 50 public utilities. And then we also do about that many that are more similar to you, an enterprise fund, a governmental entity that's an enterprise fund only reporting. So we've got a lot of similar clients in our portfolio. So this is not a new thing to us. I wanted to explain a little bit about the audit that we perform versus the audit that you engaged Sage accountants to perform. Sage was brought in to address specifically the fraud that was suspected, and they were very thorough. We've had a chance to review their report as part of our audit and planning and identifying risks from a financial statement audit. They're very thorough in their process and procedure. They're experts in the area of fraud investigation. So that audit has a very specific purpose to identify and quantify any potential fraud that's taken place. Now, our audit is of a different nature. Our audit is to express an opinion on the financial statements taken as a whole. So if there were fraud taking place, we would certainly need to design our tests to identify that, but ours is not a fraud audit. And I'd be happy to go in depth more on that if that's not clear. But as we came on, I want to tip my hat for a minute to the audit selection committee, to the board representation on that committee, and to management as far as the forthrightness in which they engaged us. We knew that there were potential allegations that had taken place. We weren't kept in the dark on that at all. It was I will say it was a very tough situation to come in as the auditor with a CFO that had been dismissed. That's like going into a football game against the Seattle Seahawks with your Little League team. That was really a very difficult position to be put in as auditors and as management. Now, I will say our staff would come in court if they participated in an engagement like that where the client was uncooperative. We had an absolute opposite position of that. The staff were phenomenal. They bent over backwards. They had their data. It's not like an audit. You've got a month off where you shut the company down and you bring the auditors in and you have nothing else going on. The staff still had to keep this thing rolling. And they did a phenomenal job of addressing all of our concerns and questions. I shouldn't say concerns, but all of our questions, all of our requests. There were a lot of things that the team here had not dealt with before, that it was in the previous CFO's job assignment, and he was the only one that did those, and rightfully so. It's not inappropriately designed. The CFO has a lot of those responsibilities. Without the CFO there, the staff was left to, there were some things we had to go back 8 or 9 years to research and figure out how it was taken care of, because that knowledge was held by the CFO. And again, the staff was phenomenal. The board was phenomenal. Joe was very helpful in going back in some of that historical things. So we received nothing but tremendous cooperation. I think the board needs to recognize the amount of effort that went in by the team here to make this audit even possible. Without cooperation, we probably would, well, we wouldn't be here discussing a near final product. Now, one of the things that I understand that you've been provided with the financial statement. This is a draft, but it's a very, very near final draft. We have a quality process that we have one of our public utility governmental experts will do a final review. He's not involved in the engagement. He was involved at the planning stage to make sure that we were on the right track. He'll do a final read-through to make sure everything's in accordance. it's nice from our standpoint because we have someone that's all he does. I don't have the luxury of auditing 40 of you because there aren't 40 of you in Utah. Now, if there were and I could do that, great, that would be fantastic. But we've got a regional expert that does just this kind of thing. So he'll take a final read through it. We don't anticipate any major adjustments. There may be some additional disclosure or some tweaking of footnotes, but we don't anticipate major adjustments from that.
Did that documentation you're talking about, did that come on email rather than hard copy?
You know,
No.
oh, I'm sorry.
I don't have it yet.
That was my slip. I'll work with Ryan, I'll make an adjustment and we'll print it, so I will give it to you here shortly after.
Well, and know that, that we remain available to you. We're hired by the board, we're fired by the board, we answer to the board. And so the vast majority of our work is with management. We're at your disposal if you have questions. Bart has my information and be happy to take a call or talk through any of those with any of you at any time. Now, I mentioned there was a lot of work that we had to go back a ways to address. There was a lot of cleanup work that we had to do, some things that hadn't been accounted for several years. A lot of that work is stuff that accountants get all excited and worked up about, but overall isn't going to change the financial position of the company. So we certainly want to make sure it's right and that we're rolling forward, but in the grand scheme of things, and I don't have the exact number in my mind, but it's right around about $250,000 of net assets that we're restating. Now keep in mind that doesn't represent a single penny of cash flow. That's how things were recognized in the timing of accounting recognition, not spending of money, not inflows or outflows. It's just the recognition of items that have been taken care of in the past.
Wrong cubby holes.
Even sometimes the right cubby hole, just in the wrong period.
Okay.
And so, well, that number sounds, if you're talking about the Skeen family budget and $250,000 of timing recognition, that makes a difference. We're talking about 1% of your net assets. So it really is an overall financial statement. It's not a huge number. It doesn't represent any resources that you thought you had that you don't have now, or vice versa, that you didn't know you had that you now have. It's simply timing things and accounting recognition. So it's more accounting policy than actual protection of assets or recognition of liabilities. We do have a number of items that we feel are of significant reasons for attention. I don't think any of these are surprising to you. They shouldn't be surprising to you, where for a good chunk of the wrap-up and certainly the year-end close, there was not a full-time CFO in position. We noted a significant deficiency with relation to the preparation of financial statements. Now, I will say that I'm going to shoot a little loose and free. 50% of the government entities your size probably have that same deficiency, because you don't have the resources to have a robust accounting department to where you're able to dedicate someone for 2 months to preparing financial statements. I'll tip my hat to Bart specifically. He came in way after we were engaged. I mean, really a long time after everything, and took ownership of things that he had no involvement in. So he's been fantastic to kind of piece that together, and I'm optimistic that process, just by hiring a Bart, will improve dramatically. Now we do have, we had a vast number of adjustments that we made. Those were to the level that we would consider that a material weakness for this reporting period. But again, going forward, we feel like management is addressing those in a way that will be improved dramatically, and already has been improved dramatically. I want to make sure I get the right things in front of me.
Could you please explain in non-accounting language what you mean by making these adjustments? What does that mean?
Absolutely.
Making adjustments?
Absolutely. So what we'll do is we'll come in and we'll look at the trial balance, the accounts that you have, and we'll take I don't know that we have this adjustment, but we'll use this as an example. We'll take the bank statements and we'll compare it to the bank reconciliation. We'll do some testing on the reconciliation to make sure that the ins and the outs are appropriate and that you end up with the right balance. Now let's say that we have a deposit in transit that got double booked. We're going to make an adjustment to reduce the cash down and then appropriately record that. So when we say adjustments, that's we're taking the balance sheet, making sure that those heavy categories, the cash is stated appropriately, the receivables are restated appropriately, that we've recognized revenue in the right time period. And so when I say make adjustments, those are the things I'm talking about, is reclassifying and getting those accounts.
And you did that for 8 or 9 years?
No, some of the transactions go back that far. We to get those, I understand that I think if I head off in the wrong direction, corral me. But some of the transactions were initiated years ago. We had an agreement for some joint construction and utilities that resulted in a liability on the balance sheet of $900,000. Well, that hadn't been touched since it was put on the books in 2008. And so it sat there, and I read through the agreement. It took about 5 minutes to realize that's not the same. We don't owe the same amount today as we did in 2008. So we had to go back and research and figure out what should have been applied to which period. We didn't go through and adjust an annual adjustment for that. That's meaningless at this point. So we made an adjustment to the beginning balances and then got the current year correct so that the revenues and expenses are appropriately stated and our balance sheet is right. Does that make sense? Okay, perfect. We talked about the journal entries. We talked a little bit, not a little bit, but part of our audit is that we do review internal controls. And we take a look at where there are potential areas for breakdown in that. And we noted that, again, part of it is the size of the entity, part of it's just maybe reassigning some functions, that there was a segregation of duties issue. And we've talked through that with management. They've got some great ideas on how to strengthen the segregation of duties so that one person can initiate a transaction, adjust the transaction. It leaves things right for
these things been adequately documented. I know that last board, before we came on here, that there was discussion of office protocols or office procedures, and there was some comment about, oh, we shouldn't do that because, we'll get robbed. But is that the same document, Blaine, that these things, these constraints are going to, or how are these things being documented so we know that this is the way we're going to practice our accounting?
Yeah, we'll issue an actual written letter that will detail some of our findings, and we can certainly explain that in more detail to you at your convenience. But then management has the opportunity to respond to those. Look at that. That's quick. And so we would certainly welcome, but management has already provided a draft and will continue to provide some responses to us.
That'll be follow-up between us.
Yep, and that's something that we'll look at as well. So we mentioned our quarterly, I'm not going to use the word audit, and I appreciate Blaine catching that, is that it'll be a spot check. We'll go through and we'd love some board feedback on what you would like us to look at in the quarterly. If there are things we can help to assist you, that you want our eyes on, we can kind of come up with a joint checklist. These are the things that we'll do in the quarter to help you fulfill your responsibilities. The last thing that I wanted to address, and I didn't plan to go through the numbers. I think that Bart knows the numbers and we can do that, and we can come back up for a working session if you really want to break it down after you've had a chance to really go through it with a fine-tooth comb. The one thing tidy, is that right? I can't tell you how much it makes auditors happy to hear boards wanting to be involved and to be involved in that process. I felt nothing but that from the whole organization, is that there's obviously some events that have occurred that have caused some heightened interest in board involvement, and that's phenomenal. And we would love to, any way we can help out with that. one word of warning is you want to make sure that the board is unified in doing that. Because if you're going in to check bank statements and then someone else is checking, you don't want to bog management down in their functions. So if all of you can work together on, I think it's phenomenal. Your idea to check bank statements to reconciliation is a great idea. And I'm sure there are some others that would be a great idea to have some board oversight. And the state auditor can help you with that. They're good at that. We could help, if there's some things that you're questioning. But again, I would work as a board rather than as 5 individuals to make sure that you're not causing undue work for the staff.
We'll keep one person